For traders that have emailed and asked, the links for the free downloads are in the description box below. Just click on the link or copy and paste and put that in your browser. The 4-step method to high performance trading and the 7-step daily routine for high performance traders create the rituals, the mindset, and the winning attitude to master the markets. Bulletproof yourself with your daily routine and your habits. Force yourself to be getting better, 1% better every single day. How good can you get, traders? Again, the free downloads, the links are down below. They're both free courses. Let's get started.
G'day traders, Stacey Burke from Stacey Burke Trading. We're heading into the end of the trading year, and we're about to head into a Christmas week and then our New Year's week. And I want to emphasize to traders the importance of not only sitting on your hands, but understanding the best trade setup playbook. We've talked about keeping things as simple as possible, focusing on rinse and repeat opportunities, breakout traders being triggered into the markets, first red day signals, first green day signals, inside days, the day zero templates. These are rinse and repeat setups that show up again and again and again. We also have the opportunity for positioning ourselves in line with a higher time frame thesis after a major red news catalyst, first bar, first bounce opportunities. A major importance of a new month. And of course, in this particular case, we're going to be starting a new year. This is a great opportunity to review your daily charts and understanding the importance of a new month and keeping things as simple as possible. Getting away from trying to catch the high and catch the low and actually having rinse and repeat setups. Many traders have the knowledge, the skill, and the technical ability, but they don't stick to their plan. They do everything wrong when they get to the screen. They have a plan, but they don't stick to the plan. And that's called self-sabotage. We're looking for setups on any instrument, not trying to read gold because it's my favorite or because it moves or trading things because they move. Where is the instrument that has the easy money-making trading setup? Looking for the easy money setups on any instrument. Being patient, stepping back, letting the market set up. The only thing that I can control is myself. So if I go to the screen every day and trade something because it moves, I'm taking trades. I'm not actually executing rinse and repeat setups where it's easy for me to make money or align myself with that thesis once it's in place. We'll look at some examples of just keeping things really simple, but also being patient and letting things unfold. And then when the opportunities present, regardless of the session that you're trading, being able to participate either in a longer time frame opportunity or looking for trades in the session that we're trading that align us with the higher time frame template. New Zealand dollar, we saw the month end and open on a first red day signal. First red day signal is a sell high shorting opportunity if indeed it presents, whether that's in the session that you're trading or as that template unfolds. We have week one breaking down, making lower lows on the inside. Now I'll reinforce to traders, the inside is the inside of a previous weekly range. We're inside of that range. We haven't gone higher and made new monthly highs. I'm not talking about little bars on the inside. These are daily levels. We've broken down first red day signal. Day one, day two, day three blowing off in the direction of that move. Week one, week two continues to make lower lows. Now, this is where traders sometimes will get stuck because they'll call this a first green day signal on Thursday or on the Monday, but we have a market that's breaking down, breakout pullback, continuation, breakout pullback, continuation, differentiating that from a market that has broken down and giving a first green day signal for a continuation, targeting back through the high of the month. We have a market that is breaking down, making lower lows, which is the setup for the pump and dump template. Week one, week two, week three, continuing to break down in line with our initial first red day signal at the beginning of a new month. And I'll repeat, new month, new timing cycle. Page 25 in the playbook, we talk about false breaks can be the beginning of large moves. We saw an entire month reversed in the New Zealand dollar example, starting from the very first day, a first red day signal, just reinforcing simplicity and keeping things simple, staying in line with that higher time frame thesis until something counters or changes that. Now here's the thing. That market may have only given one or two opportunities to re-enter an existing strong trend in the session that you're trading. Some traders may have held positions, but other instruments may have offered better trade setups in the session that you were trading. But certain days, certain setups will present, keeping it simple, but understanding the higher time frame template. The British pound gave a first red day signal, first trading day of the month, similar to the New Zealand dollar, but it then traded back up, giving a first green day signal. Now remember, these are signal days. That's what can alert us to the instrument. That doesn't mean the next day we have to take a trade. That alerts us to the potential of an opportunity that could be building day 1, day 2, day 3 into the backside of the week. Remember, I talked about signal days. That's what those are, signals to alert us to a pending opportunity that could set up. Now we have week 1, week 2, the closing range of the week, Friday, closing as a signal day. We then have a market that breaks a daily level, lower low on the inside of a previous weekly range. Day 1, day 2, inside day, break of a daily level again, and a first red day on the backside of the week that is in line with our original signal day. Day 1, day 2, day 3, the backside of the week, breaking out, closing and breakout now, continuing to close and breakout as we end the week, lower lows, taking out the low of the first week of the month. I'll reinforce the traders understanding that when you get a first green day, you're in a market that has broken out. Markets do three things. They break out, they pull back, and they continue the move. They break out, they reverse and fail and do a range reversal, potentially, or they stay range bound sideways in a trading range. Now for traders who are getting caught chasing moves up high in a market that is broken out, I repeat about building your muscle memory to actually understand what a first green day setup opportunity will look like. Now remember, if you're chasing this in the US session up high or following it the next day because you had a first green day signal and you're buying high, is that what the best first green day template looks like? Or do we have a market now heading into an FOMC Wednesday that is continuing to trap volume up high, creating a potential neckline, and then a first bar opportunity for traders who may have positioned themselves in line with the FOMC first bar collapse? Breakout, pullback, continuation. Week 1, week 2, week 3, reversing through the low of the month, pulling back and continuing to break down and close and breakout, giving us a first green day signal as we closed out the week, heading into our last week of the trading month. Now remember, these are signals, so I'm not worried about trying to figure out what this might do. Is there a setup? Now in this particular case, it's day 1 opening range in a new week, the last week of the trading month. So we sit on our hands and wait for that market to offer us an opportunity unless it has given us that in the session that we're trading. Obviously, London traders have had a position for a shorting opportunity trading back down into our low of the month level. NASDAQ gave traders some excellent opportunities this month as we had a market that closed in breakout at the end of the month, at the end of November, in a larger asymmetrical triangle pattern, an ascending triangle pattern, in a market that was in breakout on our higher time frame, but also making higher highs and higher lows as the new month began. A beautiful coil exploding day 1 on a first green day signal at the closing range of the week. Week 1 closing in breakouts at the end of our first week. Traders looking for a shorting opportunity against a higher time frame breakout Day 1, higher highs on week 2. So stopping and thinking, do I really want to catch the move trying to counter the higher time frame? Now, there may have been a session nail and bail scalping opportunity, but the higher time frame thesis is still a market that is continuing to trend higher. We have day 1, day 2, day 3 blowing off in the direction of the trend, our midpoint range of the week. And then we head into the backside. We have an inside day signal day and a market on Friday that made higher highs. The closing range of the week making higher highs, dumping down into the high of our opening range. So when traders get frustrated because they didn't get a massive collapse, understanding you're counter trending a trending market, a higher time frame trend. But then we head into week 3 blowing off on day 1, a day 1 runner. And then Tuesday gives us a signal day. First red day, inside day. We have an FOMC 2-part release on Wednesday. That was an excellent opportunity again for traders who were willing to trade after the news release in a market that had made lower lows with a first bar news momentum catalyst opportunity. Now, whether or not traders trade those is entirely up to them at your discretion, but there was an opportunity for traders to take advantage of that collapse from the FOMC 2-part release, week 1, week 2, week 3. Markets do one of 3 things. They break out, they pull back and reverse, and this is an excellent example of that. Week 1, week 2, week 3, reversing the range, breaking down, and on Free Cash Friday, the closing range of the week, giving traders a parabolic reversal trade, closing as a first green day signal. Now, we're heading in towards the last week and a bit of the month and the year, sitting on our hands and waiting again for a best trade setup to evolve. Keeping it simple, but understanding the higher time frame template for scalable rinse and repeat opportunities. Now, gold is a textbook example of day 1, day 2, and day 3. 3 days of breakout traders in the markets. Remember, we're hunting setups that rinse and repeat. This is a template. 3 days of breakout traders triggered into the markets in a larger 3-week trading range back up to the high of the previous week. Day 1, day 2, day 3. 3 days of breakout traders triggered into the markets front side. Remember, day 1, day 2, day 3, reset. Wednesday is the midpoint range of the week. And Thursday, day 2 on the backside, range reversal, closing as a first red day, aligning ourselves with the higher time frame template. That market continued to break down back inside of our week 1 high-low range, coiling sideways, making lower lows on the inside. The inside of what? The inside of a previous weekly range. It breaks out of daily levels. And we have another red day signal in line with our first red day collapse. Pump and dump into the FOMC 2-part release, taking out the low of the month and closing on Thursday, day 2 on the backside, an inside day and a first green day, a close higher than the open. That gave traders in the U.S. session a buy low opportunity in our U.S. window. Now we head into our final week of the month with some holidays in there, but pump and dump template, signal days, sitting on our hands if we're not aligned in an earlier session, Asia, London, or New York, giving traders opportunities as long as they understand the template that they're trading in, keeping it simple, not worried about catching moves and grabbing moves. Where is the actual setup, the playbook best trade setup, where it's easy to make money, keeping it simple, stress-free, and profitable. So as we head into the end of the month and we're about to start a new year and focusing on simplicity and making this our best year yet, being willing to sit on our hands and wait, have a basket of instruments, and just filtering through and understanding the monthly cycle. Keep it simple, traders. Make this your best year yet ahead, and may the markets go with you.